Now, first we are going to start with complex chart patterns. Now, this video is for intermediate people. From starting, I'm not going to explain. I'm going to explain for intermediate people complex chart patterns, head and shoulders, parallel channel, ellipse, pin and trap, blue ray, and there are other even chart patterns. I'm going to explain. This is mirror market concept. Uh, this concept is developed by Candle King. So first, we are the world of financial market jungle. What type of world is trading? There are so many vast opportunities in financial field. So these all things in detail is explained by Piyush Sharma in his YouTube channel Candle King. So you prefer for only just first topic you prefer his channel. So in detail I'm going to explain about this all second and then third, fourth, fifth, sixth, seventh, eighth, ninth, tenth, every concept first of all. But uh, previously, first we are going to have an overview how things work. What is head and shoulder? What is parallel channel? What type of structure does market form? For this, we are going to directly enter charts. So let's go. So right now, this is a market which is gold market. The first one we are going to learn about parallel channel. In parallel channel, now basically first basic things you should know that this from here to here is supply and from here to here is demand. Means these green candles are known to be demand and red candles are known to be supply. Means green candle represents the buying, red candle represents selling. Okay, now by green candle the market goes up bullish and by red candle market is bearish. Now these are the simple basic concepts. Now firstly I'm going to search for a parallel channel. Okay, this is an parallel channel. Look carefully. We are going to draw a trend line from end of the green candle with the end of the green candle. Now I'm going to tell you what is end and what is start. So those concepts are very basic, so I prefer uh, to check my playlist, okay, for basic concepts. Now this is a parallel channel. What is happening here? Look carefully. There is a supply. After that supply there is a demand which is almost similar to the supply. In this case both supply and demand are same. Again supply is being provided by the market and after again the demand increases. Demand almost becomes the same as previous supply again. Now this time what the market does, supply has been half, the demand is been half, supply is been half, then demand is made full, and after there is a supply. Okay, firstly now you should look at this equivalent amount of supply, equivalent amount of demand, equivalent amount of supply, equivalent amount of demand. Now here there is structure breakout. The breaking of this demand and supply means there might come a big move which we have seen over here. This is the big move. Okay, now in generally you should focus at this similar equivalent demand and supply. If there is a similar equivalent of demand and supply, then we assume that that is a parallel channel. Now how this parallel channel works? Now for the parallel channel, so first of all you are going to look at this. Now this is a demand. Okay, this demand we are going to consider if the market had broken in up direction. Wait, watch the full video. If you are getting confused, watch the full video. Have patience, okay? After that video, even I if possible, I will explain theory part. Okay, just be calm. Firstly, we are talking about demand. Now, in this case, the market did not go bullish. Instead, it goes in the bearish trend. Now, in this, what we are going to apply? So, this is the demand. Here, the price increased over here. From here, this is the part of first demand. Before that, this is a supply. Okay, this is a supply. Look carefully. Demand started from here. Okay, supply started from here. So you assume this is a first demand. Okay, whole demand. You assume this is a whole demand. Now this is a whole supply. Now what we are going to do, we are going to use this trend line as QFL line. We are going to start from here, starting of the supply to the end of the supply. Okay, then we are going to mark it from here, from beginning of the trend. Now in parallel channel, if there is a breakout, how we are going to identify? Okay, how we are going to identify an reversal area? Firstly, just now I have said you take a supply of previous supply. How we are going to take, I have explained. Okay, now keep the trend line in this way from beginning of the trend. Now look carefully. We have these connections over here. Now this is the beginning of supply. Look here. Market has broken from here, so we are going to take consider supply from here. So this is first supply. Then we are going to mark a zone over here. Okay. Now this zone might be bit uh, below or above. Consider this properly, this would be our reversal zone. Now there is a concept of volume burst. See, right corresponding, corresponding to this box, we have to consider this wick. Look carefully this wick. We have to drag that wick. We have to drag a line. Okay. Now I am going to explain you by replay. Okay. Now in this way, let me remove these things first. Now what does market does use? Let me take a little bit over here. Okay, and now we are going to start. Now first market, we are going to remove even this thing. Okay, now this is how market looks. See, after what does market does? Now we are going to see that. Okay, now what we are noticing over here, here is equivalent amount of demand and supply. See, equivalent amount of demand, supply, demand. Now again we have to check for this supply. If this supply is equivalent to the previous supply, then you should understand, you should grasp that there is a possibilities of formation of parallel channel. Okay, now here is a rejection. Look here carefully, rejection. Okay, this is an break of structure. Those who don't know break of structure and change of character, be patient. Nothing very complicated, I will explain in further videos. Just assume that this is a rejection. Rejection means rejecting the level, and after providing a supply. Okay, now supply has been provided, and after we are going to look again for demand. Oh, perfect, demand has been provided. Now we are going to form an parallel channel starting from this end point of green candle to the end point of this green candle. We're going to extend line in order to see that how much the market gives continues in parallel channel. So after where we have to apply this below line, we have to apply at the start of the red candle to the highest point of connections. How many connections we can form, those many connection we have to do. First connection, second connection, third connection. Now here first connection, second connection can be formed. So now in this case we will wait for the market again. We will have patience. So in this case market did not go here, we did not take a rejection. Now here we can understand that there is the market is providing half supply. Okay, you should consider that point, remember that point. And after this is a half supply. Half supply means this is a full supply, then that supply is half, become half. Then again you have to see that even demand is becoming half. Okay, you should just notice these things. In further videos I will tell the importance of these things. Okay, now again the market did give equivalent supply, previously equivalent supply, then after here the rejection takes place. We should still wait, be patient. Okay, now here they did not cross the parallel area. Look here, look closely. The any candle did not close above this and formed another new candle. See everything here. This green candle, again the red candle came here. The green candle opened here but red candle came here. Okay, just these are noticeable things you should notice. Now then after supply has been made, now purely in this whole trend, what you should do is firstly you should know that you are willing to trade in uptrend, so you have to find an up direction reversal boxes. So QFL reversal boxes, where does the reversal come? So in order to find the reversal, how we are going to do these things? Okay, now the supply is this way. First way is that you can take the supply from here to here. Then you can apply the supply from start of the point. Okay, now you are going to mark an QFL box. This is quantity filling box and this is quantity filling line. These are two nameable things we are having. And then after we are going to look for an confirmation. Now here we are going to look for any confirmation that bullish engulfing or any kind of confirmation in order to market goes further up. So here we do not have those kind of confirmation. You can use even trend angle confirmation, which is this, which shows the angle is 52. Okay, then after that there is a red candle. So the market still wants to give supply, so then we should wait. Don't worry if you don't understand that those are trend angle and those things. In further videos I will explain these things. Just normally you should understand that in this video you should understand how parallel channel and reversal boxes works. Okay, then after providing and supply this supply, oh here this line, I told you how to mark this line. After marking this line, so wait for the market. If market crosses this line and closes below this line, then you are able to duplicate this and you can apply the double demand, double supply. You are eligible to apply the double supply in order to catch the reversal areas of the market. Now, yes, still not yet. Yes, not yet, not yet, not yet. Okay, okay. Now here the market has made a move which is below this. See here, every time the market did not close below this line, but this time market did close below this line. That time you can, from here you can double the supply. Okay, then you can mark the, this is an half of the supply. This line marks, this line marks half of this supply, half of this line. Okay, this is the area of 1.5 level. This is the area of one level. This is would be the area of 0.5. This would be the area of 1. This would be area with be the area of 1.5. This would be the area of 2. Now those intermediate level people will understand this. For beginners I will make this, uh, first learn basics in, I will provide a playlist for you. Then after you should wait for, again you should uh, take this box. You can wait for the confirmation candles over here. So again, here is a bullish engulfing. Look carefully. Here is a bullish engulfing, but this thing failed. So here, there are chances that your stop loss might get hit. See, in every time the risk management is very important in this game of trading. So be careful. Now what we have here? Well, we have a another QFL box we are going to draw over here. Now we are going to remove this. Now market has come over here. Okay, the market has provided an engulfing. How should we check that this engulfing is uh, correct or not? Now look over here. If you see there is an bullish, inverse bullish engulfing, you would have made this much, this profit. Okay, this you would have scalped this much, and you would have removed your TP from here. Okay, then after still the market continues, you can take these areas. Now you should check that this thing, it's how the bullish engulfing is correct, either correct or wrong. See, this is the liquidity of bullish engulfing. If the previous liquidity of the hammer is twice the, this is once and this is twice the candle of this candle, means this liquidity is twice the liquidity of this body candle, then we are going to confirm that this engulfing is true. But in this case candle, then this is a valid bullish engulfing. Now look carefully. Now just there is a small gap over here. Now this is a negligible. Okay, this is negligible. So in this way you can confirm these things. So now this criteria condition suits good over here. Now this is an proper bullish engulfing. Now I'm going to remove these things. Now in this way what we are going to do now, right now we are going to make a trade plan. Okay, we are going to make a trade over here. We would have stop loss below this candle. Okay, now what we are going to consider. Now previously I have said you, this time what we consider this supply. Now market forwarding, listen carefully. Market for forwarding, we go in the market for forwarding way. Okay, now this we have considered in over here. Now what is the forward now we have demand over here. This is supply, this is after this supply what comes here, the demand comes. Now similarly after this supply what will come, the demand is going to come. In this way the market forwarding. Okay, if you substitute the, if you make this half line. Okay, wait, I will show you in these two parts. Okay, symmetry. Consider this as symmetry. Now in this symmetry, firstly you are going with this supply, then after this demand. Similarly, after the symmetry ending, so you will have this supply, then after you will have the demand. Okay, now similarly this demand, you are going to calculate this demand for targets. Let me remove these things. Okay, now right now you are going to take this demand from over here. You are going to take until this, then you are going to take this demand, you are going to apply in this way, then you are going to mark your target areas in this way. This would be your QFL box. Your target would be below the QFL line. Okay, this would be your target. Now let's wait. How much it is? 1 is to 3. Okay, if possible, you could have even lesser. If you understand the character of this hammer candle, if after becoming pro or elite trader, then you would place your trade over here and stop loss would be this much, and you would get 7 is to 1 is to 7. Okay, I mean 1 is to almost 8 now, but you are a beginner, then you should uh, risk little bit, I mean manage your account in this way. Okay, now you are going to place your targets over here. Now you are going to just wait. Okay, now we are going to wait for a market do its thing. Okay, we have almost over here. Still, the market is not completed yet. It's more yet. We're going to watch. Okay, done. See over here, the profit has been taken out. This is how mirror market concept works. Now in this whole video and in this whole channel, I'm going to provide in detailed for intermediate people in detailed uh, explanation of how mirror market concept really works. I'm going to provide you an organized way of learning in which you can understand and grasp things very easily, and it would be time saver for you all people, because I am making an effort to organize these things, explain clearly and consciously as a trader. How should a trader manage these things? Even the psychology is one of the most important part, plays most important part over here, because you know, see, there are so many psychology videos. I am not going to talk about those things now. Really important, what matters is I am providing this kind of uh, pure lectures. So please save this video in order to have this video in your feed. So do something about this material, still study material. Okay, now next time I'm going to, now what we are going to, still what we are going to have, we are going to explain you about head and shoulders, ellipse, peanut, rat trap, blue trap, blue ray. Then after, for beginners, now for beginners we would have complex candlestick patterns, one six model. Now just now I told you about hammer. If you are advanced pro player, then you should know that at particular location, if hammer comes, you can make small investments and win big. Okay, now these are type of one CCP model: hanging man, hammer, inverted hammer, shooting star. I'm going to explain these things. Okay, now what does mean by 2 CP model, 3 CP model, 4 CP model? Now what is weak line concept? Now again in detail revision of mirror market concept, how the Candle King explains these type of videos. Okay, just be updated. Okay, thank you.